everyone. I'm the mentor Ismail, and tonight, this morning, sorry, I'd like to go a few things. I'd like to show you exactly what I meant by a scanner that gives you like 90% accuracy trading forex. Yeah, but before I delve into that, I'd like to do a little bit of introduction into why this is very important and my goal or objective for doing this. So the first thing is, of course, today we are in the fast-moving world, and everything is tech. Technology is already on the high side. Something that you cannot do without. In every sphere of life, technology is very present. And talking about technology, like things comes out every day to make job easier for everyone. For example, we have since inception for a while, we have what we call a washing machine. It reduces the time you spend on washing your clothes or doing your laundry. And we have a pressing iron. Like when I was growing, it wasn't like that. So we have pressing iron, which also reduces your the time you spend in ironing your clothes, making it straight. But later on, now we have I think there's a machine that does that for you. All you just do is place your clothes in and then it's done. Same thing, movement from a manual car to automatic car, and chat GPT that we have today. All these things are done for us to have an easier life, which means the effort you put in these days will be little and the results you get will be massive. So this is just simply what we call leverage. Leverage is very important in everything you do. Now, for forex trading as well, we have the chat GPT of forex, which makes jobs easier. Now, gone are those days where people flex muscles and like, yeah, when you do, doesn't mean that you're profitable. Being profitable is the goal of forex trading. It's not really how much knowledge you've gathered and in theoretical terms and how much chart you can draw, because sometimes people feel that this is the flex when I'm on the chart from morning till night. I kid you not, that's not actually what people want. People want to get into forex trading because of the $7.1 trillion industry and they want to have their own share of it. Now, if you are the guy who can lead them to that, then they're ready. But then the question is, there are people who may not be opportune to really tap into this industry, even when they really want to do that. Now, these are type of people that I'm really talking to tonight, or this morning. I kept saying, I don't know why I keep saying tonight. Anyways, yeah, this morning. Now, first, so this is going to be like going to two categories of people, so to speak. The first set of people that I'll be addressing today, though this video is actually meant for my team, my inner circle. Okay, yeah, because some of the new ones really want to know how to use this scanner into the, to their own advantage also. Yeah. So the second reason is also to make it to the whole world for whoever would like to know how to leverage on AI to be profitable in forex trading with less work, less time. After all, that's the essence of forex trading, is to give you the lifestyle. Remember, number one, freedom of money. Of course, you need to have a lot of money, but in doing so, it gives you a lot of time as well. You shouldn't be spending all your life in front of the screen. It should be just a few, maybe 1 hour or two a day, you're done. You made a lot of money that people get at the end of the month. That's exactly the point. And then the last thing is to have a freedom to travel anywhere without having to think how to move your business, how to balance your certification with the new country, with the new area, all this stuff. So forex just give you all this freedom. But then how can you have this freedom if you're still tied to your screen? How can you have this freedom if everything is still complicated like it used to be? So that's exactly why this is important. This video is important. Okay, I'm excited already because I know what I'm going to be showing you will wow a lot of you today. Now, I said there are two categories of people. The first set of people that this is actually meant for are the newbies, the ones that are new into forex. So those days where you have to learn forex, you have to lose some money and keep losing, upgrading your win rate from 20% to 30% to 50%, balancing it and all that, spending years to do that. A lot of people don't have the patience. And some don't even have what it takes to really go through all these technical terms and technical drawings and all these things. Some people don't even have the luxury of time, or why some are just not fascinated by graphs and charts and all that. Yet they want to make money from forex. So how do you go about it? Exactly. The AI will help you do that. Leveraging. You understand? So this is actually for the newbies who don't know anything about forex, yet they want to make money from forex, who don't have the luxury of time to learn, yet they want to make money from forex, who even when they want to learn, they can't stand the number of years that it will take. Yes, this is for you. Or who want to also be under the mentorship or in a community where everybody is starting the same starting at the path the same way. You understand? And want to be profitable as soon as yesterday. this is the right thing for you. Then the second set of people are the experienced traders. Like, I'm an experienced trader. Really, I trade without AI. As a matter of fact, I've been trading since 2021. I could look at the chart myself. I can do anything. There's nothing new to me in Forex, in as much as everyone is still learning. But at least I can make money from Forex trading without even having anybody behind me or any or whatever. But then people like us appreciate this more. You know why? It reduces the number of time I spend on the chart. It reduces the number of analysis I do. For example, I had to focus on one or two pairs because it's not easy analyzing one pair, then you go to the next pair, then you know the next pair, and you know how market is. You only see the opportunities that will be presented to you. You can't really force the market to give you what you're looking for. So that is why this is important for people like us. So me now, I can wake up in the morning with the hope of making money without having to go through the stress. All I just do is open my scanner, check the opportunities that are there, and the moment I see it with my little experience, I take the snipe and I make the money. So the question is, if I make $1,000 on a particular trade and a very experienced Forex trader somewhere, somehow made the same amount on a particular trade, spending a lot of time doing it by himself, and I'm using the AI, it doesn't matter at the end of the day. The question is, who is profitable? That's what matters, isn't it? So this is for two of us, both the experienced and the newbies. Now I'm going to go straight into these scanners and I will explain the ones that I've studied, and then so the one I've not studied, but based on my experience, what I'm seeing, and we all see it together, you see how it works. And I can guarantee you, this is not just again saying or what to say to hype you up. This is so good, and this is the solution to a lot of issues for those who want to really be profitable in Forex trading. So you join me as I share my chat. And after that, maybe I'll answer questions from my people here, or maybe we'll go into the inner circle and do the same. And you'll be hearing of the inner circle. In case you're interested, you need to join the inner circle, okay? All right, let's go. Did I introduce myself? I'm the mentor, Ismail. Yeah. All right, let's go. I'm going straight to the screen right now, and I hope. All right. So this is my screen. Welcome to my screen. This is where I'll be taking you through everything. Let me hide this for now. Okay. So I decided not to make this a big public like a Zoom call. So I will have it to save enough time because questions will be limited. So I have just few of my inner circle here, about maybe 6 or 5 of us or so. Yeah, that's okay. I mean, just this recording is not a live training. It's actually something for you to watch and understand why I'm so excited and why I said what I said with the title of this recording. Okay. All right, let's go in straightforward. What I have here is let's first thing you, of course, you log in. Now, I forgot to tell you the name of the company that is in charge of these powerful scanners is called Jifu. Jifu is a very big company. As a matter of fact, it's a company that is made up by multi-million dollars, multi-billion dollars company CEOs, chairman who have built several companies in different places coming together to form this community. Now, in this community, a lot of things that happen. Educations on Forex, cryptos, education on AI, e-commerce, everything that is needed and relevant today to really be relevant. You need Jifu. I mean, this is what will connect you. And the last but not the least, the lifestyle, because after all, when you make the money, how do you spend it matters. Because it's not just accumulating money, it's about accumulating the memories that the money brings, isn't it? So the travel where you get discount, full discount anywhere you're going, on your tickets, on your hotel bookings, in your locality, internationally, everywhere. Jifu has everything. But today we're focusing on the Jifu Forex area, and we're really focusing on scanners. We have other things that gives you money in Forex without even lifting a finger to know the chart. But this is the part we want to talk about today. So I hope my people are seeing this and they're learning as I show them how to use this part. All right, let me minimize this. Now, so when you click the scanner, of course, after the login, the first thing you see is golden error. Now, this part is how it works. So here, let me remind you what to do here. First thing, you have to come here to change the time zone. It's very important. So you know the timing, so that will help you. Like for me, presently, I'm in Nigeria, of course, West Africa. And when I look at all this time here, the one I think we share the same time with in Nigeria, which is GMT +1, is Central Europe time. Italy and the rest of them, we have the same time. So because of that, I have to log in again. Sorry. Yeah. So when you do that, it logs you out, then you log in again. Or is that the reason? I think, yeah, I have to do it again. The reason why I'm logged out is because this has been on since the last night. So of course, that's to log me out because the login time is expired. So when you do this now, it will only reload, and then voila, you have a Central Europe time, which is the same time as your GMT +1. So you see here, you have the tabs. If you look at the left side, you have the tab, you go straight to the scanner. Okay, you go straight to the scanner. In case some of you are wondering, how did I get here? For those of you already in, you go to, of course, your web office, which is office2.jifu.com. Yeah. When you get there, it shows you your back office. You go to the left panel outside, you click on the menu, you click on Jifu Academy. Under the Academy, you see Jifu Live, Jifu University, something like that, courses also. So you just click on the Jifu Live, and it takes you to this part where I am now, where you log in again, and then you go to the menu, you click on the scanner, because it was what we're dealing with this morning. Now, guys, as you can see, maybe we can even see some trade idea anyway while I present this. Okay, let's look at the first one. As soon as you log in, the first scanner that presents itself is called the golden era. The scanners are on the left, on the right side of your screen. Okay, it's always good to do this on your laptop. I tell you, I kid you not. On your phone, it can be a little squeaky, and then you have to strain your eyes and all that. But here, you see everything clearly. So the first one is golden era. What you see golden era, actually, this strategy is actually created for scalping based on price action, but it works for mainly USD pairs. Not that it doesn't work for others, work for USD pair, but mainly gold itself, XAUS. That's why what you have here as a default pair is gold USD, as you can see. For those of you who like to trade gold and you want to be in and out, this is a very beautiful thing for you. So how does it work, actually? Let's look at it. Now, as you see now, I don't want to use, so I promise not to use technical terms. I'm going to be like, I will zero my mind, delete whatever I know before, and I will speak like a newbie. So it will make it like very complicated to understand. Just, I would think like a newbie. So forex trader out there, you have to be easy on me. Don't think I don't know what I'm saying, or don't expect all those to use all the jargons, price action, and all the stuff here. We don't want to know this. We assume you know nothing. We want the scanner to do the job for us. So as a new person, you log in, you see all these charts, all these things that you don't like to see. You'll be like, oh, what do I do? You don't need to do anything. Your job is just to look at the screen until the screen presents itself an opportunity for you to trade. So how does it work? Hopefully there will be something that will come up. But if not, I'll check other pairs that is ready or that has happened. This is always fast. With golden era, you can make your money within few minutes, less than 5 minutes. So what it does is, as this is happening now, as soon as a price action is captured, it comes, a price model is captured, it comes in and give you entry, gives you TP1, TP2. And the best part about this entry and TP1, TP2 is everything it gives you is always 1 to 2, which means a trade that you take, that for every for every percentage you put in, you get double. Either you put in 1%, you get 2. If you put in 3% of your money, you get 6%. If you put in 6%, you get 12. If you put in 5%, you get 10. If you put in 50%, which I don't expect you to do, you get 100% right there, right there. That is why this is so beautiful. I hope a setup is about forming now. As soon as it forms, it will give you the price, the parameters, okay? And for a newbie, I mean, that's what they call copy and paste. You don't need to know how it's done. The job is to quickly do it. So how you take it, either you use your, depending on where the market is coming from, I want you to note this. If you have a notepad, you write this down. It's very important. Now, if the entry, so for example, if this is going to be a sell, we all know simple. How does it work? A sell means the entry will be above, okay? Entry will be above. Anytime you see an entry above, remember, this is the beginner's stuff. So we don't need to assume everybody knows everybody know everything, right? So some don't know, like they will expect until you see sell. Now I'm doing this because there's no setup yet, right? So I have to just show you this. So anytime you see an entry, you see that entry is above, okay? As you can see here, entry is above, and then you have the TP or the target, depending on what name the system decides to use. But here is actually TP, I think, yeah. TP or target. Meaning where you are aiming to make money from is, oh, sorry, below here. The TP or your target, which is take profit, is down. That is sell. So which means the market is expected to touch here and then come down. Now, in the area of sell, I want you to note this. I'm trying to make it as simple as it can be. In the area of sell, if the market is coming from the top, okay, then you have to do a kind of, what do you call it? A limit order, a pending order. These are basic things you need to learn. Of course, we'll teach you that as soon as you get to the academy. So you do what we call pending order. Now, we have two types of pending order. We have the sell limit. So we have limit or stop. Now, depending on sell, if it's a sell, we have sell limit, sell stop. If it's buy, we have buy limit, buy stop. You get the point. So in this case now, if the market is coming from above, okay, let me just show you. Of course, you know the SL will be above the entry. Anytime the SL is above the entry is a sell. Okay, now we're talking about sell, right? So let me do that. Why this is taking our time here is because there's no setup yet, and we need to move to the next scanner. Then maybe when we're back, we'll see something. So SL here in this scanner is used as invalidation. Can use invalidation. Okay, that's what they will use mostly, invalidation, or you just know it as SL, which is stop loss, right? Okay, that guy likes to come in red most times. So whenever you see the SL above the entry above the TP, that is a sell. No doubt. Don't ask questions. Oh, is it a sell or buy? I don't know. You don't need to see. Just see what is first. The first thing is SL or invalidation, followed by the entry and then TPs. That is a sell. Now, if the market is on its way, let's say coming from the top like this, and the setup is here, it means it is expected for the market to come here to touch this entry, which is where you would have pitched your own setup, because your job is to copy whatever is here for an entry, use the a sell limit. Now this is a sell limit, right? The market will come here, tap into this, and then come back to the TP. That is the sell limit you use, okay? Because you see the market is coming from the bottom to the top. So that is the sell limit. Market comes here. Let me show you how it happens, okay? Where is it? All right, so you expect the market to come here, and then, okay, sorry. So the market will come here. What have I done? Then come down. That is the limit, okay? That is the limit. Now, if the market is coming from the top this time around, let's say like this situation, look at this place. Sometimes the market is around here, it's on its way down, and then the setup will present itself here that you should enter here. The entry will be here. Let me show you something like this. It will now be entry, the SL first. The entry. In the case of sell, remember, I'm using the sell, right? Yeah, the Nigeria image just came out now. All right. So the TP is down like this, and the market is on its way from here. It has not gotten here yet. What do? Use what we call sell stop, which means because the market is already coming down, you're only waiting for it in the future to come to your point. So you use a sell stop, expected that the market will touch here and then will keep going down and give you your money. Don't forget that. Very important. When it comes to buy, it's on the same scenario, but just that different arrangement. Now, if it's a buy, in this case now, the SL will always be first, followed by the entry. Okay, followed by the entry and taken by the TP, followed by the TP. So for example, if this market was to be a buy, when the setup comes up and it's going to be a buy, so now you see the market is already above everything here. So it is expected for the market to come down like this, to this entry, and then take off from there, back up, and go to the TP. This is what they call buy limits. Now you set a buy limit. You expect the market to come pick you to come down, then go up. That is buy limit because of the direction of the market. Okay. But then what happens if this is a different thing entirely? Like, okay, let's say the market is down here, okay, and the SL, the system gives you your buy position at the top here. It happens also, okay. What happens? So it means it is expected for the market, as it's already on its way up, to come here, hit your entry, continue to your TP. You set a buy stop. Okay, a buy stop. I think this is okay. I mean, if you don't understand, all you just need to do is watch the video over again. I mean, you can rewind it and then that's it. All right. So while we wait for the setup, in case we don't see it, since we don't see any setup for the gold, now let's check other pairs because you have the opportunity to check other pairs. Okay. Okay. For example, I want to look at AUD/JPY. Another thing is, please, I want you to note this. When you're using the scanner for your own sake, it's actually good like that. Normally, it's a general idea or advice when it comes to trading. Always trade pairs that are for the session, which means right now, if you check the time here now is like the London session. So you look for anything that has to do with London, like GBP, Europe, and all that. So anything Europe, London, and all that, and then USD. It's okay, they work together. Yeah. So, but then let's just look at, we are just searching for all the pairs here to see anyone that has or setup. So you can see how it look like. Voila, this is good. Guys, look at how it is. This is exactly how it is. Okay, so now look at this one. Hopefully, this is a stop idea. Okay, I think this is a stop idea, right? Good. This is what we call stop idea. Look at it. The system has already predicted now that, guys, you're going to make money. Now, the system has given you zone of action. Yes, that is it. They don't call it entry. Zone of action. So you see, this is a stop idea. Why? Because this is supposed to be buy. Because remember, I told you when the entry, when the SL is below, look at SL, is invalidation. Can you see it now? SL is invalidation. That's first thing you notice about this scanner. That's why it's called golden era. It's very beautiful. This is the invalidation area, which is SL. Remember, is the first. I told you that means a buy, right? But now what kind of buy? Is it a buy stop or buy limit? The market is actually coming from the bottom. So it is expected for the market to come here to touch the entry from here and then activate and go further up. TP1, TP2. That makes it what? That makes it a buy stop. Now, you see this place, this golden area is the reason why they call it golden area. Now, this is measured that is a zone or is a good place for an entry. Okay, so the market is supposed to come up here, tap into this entry, and then continue forward and hit your TP1, TP2. So the good thing about this setup is if the market gets there now and activates your entry, you're going to be making ×2, like I said, of whatever it is that you are risking. So let's look at that, how true that is. So this is the entry point. This is the TP2. Okay. And this is your SL. Okay. For those who are wondering what this is what we call the short tool, which you use in calculating your risk and the reward. The short tool is just a tool. Okay, you don't really need to use it as a newbie. I mean, it's just something. Just take your trades in your MetaTrader 4 or 5, and that's it. Look at it. So you see, whatever it's here now, the distance between your entry and your stop loss or invalidation is the amount of risk you are putting in. So this trade is saying 14.8 pips is what you are risking, but what you are getting in return is 30. That's 30. Yeah, that's 30 pips. You see, that is 2.0. When you divide this by this, when you divide this number here, 14.8, whatever you see, this, you have to put points in between. You have to divide it by 10. So 14.8, okay? When you divide 30 by 14.8, it will give you this number, which means if you have $10 in this trade, and this trade goes your way eventually, you'll be coming out with what? $20. If you have $100 on this trade, and then this goes your way, you're earning $200. That's how the golden era works. Just go there, take your entry, and then that is it. Let's check one more pair on this. One more pair. Okay. Okay. Now, whenever there's no setup, it will be blank like this. So just go to the next one. Okay, you go to the next one. I'm looking for GBP USD. I mean, that is a session of London. Okay, no setup yet. I mean, it's Monday morning. And when there's no setup, it means there's no setup. I mean, that means, yeah, the market is still what? Warming up for more volume, okay? More liquid, okay? More money. So you can do this. Now, the good thing is you can go to, this is for forex pairs. Now we have the commodities, of course, which gold happens to be one of them. Now go to crude oil. For me, I mean, yeah, I'm just showing you this. Okay, good. This is another one here. Look at, this is just giving us all the examples you need, okay? Now look at this one. I think this one is already activated and is in profit. Now look at this, this is a sell, but it's coming from the top, not from the bottom. So when it's coming from the top, the SL is up. How do I know it's a sell? Because the SL is up, the invalidation is up, the entry is next, and then like this. So what happens here is the market is coming from the top. As it's coming from here, touches the entry. Now it has touched the entry, meaning you're activated, and it's here down now. Below the entry is profit. So we expect it to get to 1, 2, and give you your rates to reward. I mean, you're done with the trade and you're out. So if you want to trade in with BTC, with indices, you have it here. That is the first kind of golden era. And you see how you take it. You wait for the setup to come up. This is the golden zone. It hits your your entry, and then you're allowed to go to TP. Let's go to the next one, guys. It's called Trend Wave. I love this one. I love this one, actually. I'll tell you why. It's simple, so simple, and it's beautiful, actually, also. And it does all the work for you. For example, look at it. Somebody somewhere has made so much money this morning. How does this work, guys? You're gonna be rich after this video. Let me tell you, at least you're gonna be rich. Don't worry, you're gonna be rich. You're gonna be happy. Let me use the word happy. It depends. I mean, rich, being rich is relative, right? All right. So look at the trend wave. That's the second scanner there. How does it work? Now, the trend wave has been designed to tell you when there is an opportunity in the market. But how it works is this. So first of all, though you don't need to stress yourself. As a newbie, don't stress yourself, but just for the benefit of people who already have a little experience, and then to give you some more assurance of why this always works, is what I want to explain. Because normally my job is just to tell you, come to trend wave, put it on, click on any pair you want to trade, it will give you the setup. Look at the setup is already here, no question asked. Your job is just to follow through. And you know the kind of trade thing you do here. If you look at it, the market was on its way up. So this entry must have come up the moment when the market was here, because this calls out instruction. That's why I love the trend wave, okay? The trend wave works with the trend. That's why it's always good. I mean, this one is so superb because it works with the trend. If the trend is downtrend, you're going to be seeing more buy, long, okay? When it's uptrend, you're going to be seeing more of short. Short means sell, long means buy. Now, if you look at it, let me show you how it works. The first rule of this one is the trend must be in place. That's why it's called trend wave. Okay, that's a act of trend, either going up or going down. Now, second thing is this line you see here is called EMA. Okay, could be 20, could be 50, whatever, I don't care. You don't need to know that. I promise you know technical terms, right? So this is what it's called EMA. Just know it for what it is, or you just know that there's a line, okay, that is dancing around like a snake. There's one in between and there's a bigger one. But this bigger one is very important, the 50. Now, when the market is above this particular one, you look for buys. When the market is below, you look for sell. When it's above, you look for buy. When it's below, you look for sell. And how do you know? The above or below must be a crossover. Crossover means, look at this. The market will cross from below to above. You see? Let me make this wider so you can see what I'm saying. Okay? Look at this. That's the first thing. So the market was below, it crossed over. You have to wait for that to happen, no matter what. Now, the scanner calls the buy already from here when it was below. The moment you see a strange candle, that is the signature candle. We call it signature candle. It's a candle to tell you that, oh, the market is about to give me some money. Oh, sorry, the scanner, not the market. The scanner is about to give you some money. So this candle, if you look at this candle here, okay, candle are these bars you see here. If you are new, you'll be wondering, okay, look at this candle here. It's kind of a different from this one. This is a plain red, this is a plain green, but this one is a red with some things on the edges, right? This is called the signature candle. And the moment after the signature candle closed, what happened? The scanner waits for the particular candle to cross over. Look at this green, crossing over this thick blue line. After the crossover and the close of this, there you see this signal, long, which means buy. Guys, buy. What do? Assuming you don't even have the parameters, you, as somebody who wants to make money, as soon as you see this closed above it, straight thing you do is you buy at this point. Just enter buy. Close your eyes and enter buy. Don't worry. Now, the good thing about this is the SL is always small, yet the reward is huge. So you know what I do? What I do for you? It helps you to minimize your losses and leverage on your winnings. It means if you buy, let's say this closes, the next thing is you buy at this point after the close. You know, it closed here, right? You buy. Oh, did I take? Okay, this is a sell. Okay, this is a sell. What's it called? So you look at it when you see a short position, a long position. Remember, long means buy. So you click on the long position. Now you place this on exact your entry point. So the moment this closes, you make your entry, you buy. Now your stop loss is the red side. So your stop loss now will be below. You see it now? Will be below this blue line and the last candle close. You see it now? Now, if you look at this, this is 18 pips stop loss. Now, for me, on scanners, I target 1 to 2, but it's actually, especially for trend wave, it goes more than that. And I'll tell you how to go about this. For this, for those of you who are experienced, look at this. If I was here to see this trade before now, I would have made money. And that's it. You're done for the day. For me, most times when I make 2 times my reward or my risk, I'm almost done for the day. Or I'm always done for the day because I have to do other things. I want to free myself from the market. Now, if you are new, I tell you this is a very recommended way of trading. Make 1 to 2 done for the day, or you can, because of this kind of sometimes you can flex the muscle and take maybe 2 trades and be done. Don't be tempted, be taking trade because this will give you a lot of wins. And you can see I mean, this was a win. If you had seen this earlier, you would have won. At least you can see it. So what happened? Did he buy or not? It bought. But the good thing is, if you had used $100 here, you would have made $200. If you have used $10 here, you would have made $20. Follow instruction. The scanner tells you to do it. You do it based on the rules we're going to be having to give you to adjust. And it's 2 times. But the truth is, it actually gave more than 2 times. You'll be asking me questions that, okay, what about all these ones that went further? It gave 4 times, even more than that. Look at it. Beautiful. Beautiful. You can keep making the money. You can still stay in the trade and be making the money, going up, 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 and all that. You see, now it keeps going up. But the question is, how do you know when it's time for you to stop finally? I'm going to show you. Assuming you are in this trade now, you see? Now, what you do, the moment, okay, I'll tell you what to do, but let me just show you the entire opportunity. The moment you see the signal giving short, Oga, run with your money. Close all the trades. It's going down. So if maybe you are adamant, I'm not encouraging you, maybe you are too greedy, you want to take a shot again because it's just like, hey, buy, you bought, sell, you sell, follow instruction and do the same thing I'm just showing you. You make serious money. Serious money, guys. Look at money you would have made this money. 7.5 times whatever you put here. Meaning if you had used $10 on this trade, $75 would have been yours. That's enough for the day. Multiply that. No, I don't do that multiplication thing. What if it's a loss? I mean, it happens once in a while. But most times, like I told you, the win rate is high. And if you see this, if I keep going backward, you see that mostly are winning. If so long you follow the instruction. And what's the instruction? Any market below this is sell. The one above this is buy. Okay? But then, if you want to buy, you have to wait for the signal to tell you that is the time for buy. When you see a special candle, then not just that, the candle must cross from below this line above and close above it. Then you will wait for this to tell you long. Then you buy. Make your stop loss above this last candle that crossed this line, and that is it. Now, how do you now, if you want to stay to this, you want to stay in this trade for this long, how do you now protect your capital and your profit? Because it's very important. So what you do, if I were you, as soon as my 1 to 2 is done, I take half of my profit and I move my stop loss. You go to your MT5, you change your stop loss from what it is now, 68.61, you change it to your entry, which is 68.8. So your stop loss is equal to your entry. So this time around, it means you have taken half already. Even if the market reverses back and try to be a loss, it won't be a loss for you. It will only take you out with half of what you would have made, which is still something, isn't it? Now, you move this to entry. As soon as you see this diamond showing here, okay, and the market goes above the diamond, what do you do again? Anytime you see a diamond, you become a diamond hunter. You move your stop loss to the bottom of that diamond, okay? That's your new stop loss, okay? And you wait for the market to keep going. As soon as you see this diamond, you wait for the market to go above it again. Look at after this diamond, it went farther. What do you do again? You move your stop loss to this new diamond. You see now, you're already saving profit. So this time around, you are not at risk anymore. Whatever happens, you have taken some profit and you are following up the market based on the diamond search. Now you see this went up, came down, keep going. The truth is, this one is so long enough to move your stop loss here without the diamond, actually. Okay? You keep on moving it. And then when you see the shorts coming, you close everything here. And then you see your account, you're already in money. Guys, if you love this trade wave, of course, I would have asked you for a reaction, but I want this video to be as short as I can. But you see, I have to explain everything. This trade wave is beautiful. Now, some of you may say, oh, okay, yeah, that's the lucky one. What about others? Is it the same? Let's look at the next one. It says sell. Guys, sell. Now, remember the steps, right? The first thing is a special candle somewhere. Now, I have to enlarge this. This is why it will take some of our time, but I believe it's worth it. I mean, if you're watching this, you are happy already. Like, oh, is there something really like this? Yes, there is. I'll show you the way. That's my job. That's why they call me the mentor is my right. So you come here at Jifu, we'll show you the scanner, will help you and make your day as a trader. So remember the plan, right? So look at those special candles. A lot of them here. Ta, 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 ta. This is a signature that, hey, guys, I'm about to cross this big guy here, okay? Now, what happened? After the cross, the signal comes. Short. What are you supposed to do? As a loyal, obedient partner of this scanner, what do you do? Short. So the next thing you do is, when you have that short, after the close of this, the next candle, you take your entry. So what do you do again? Remember the step. You come here, I mean, on your MT4, I'm just using this. So you go to MT4, MT5, you take your trade, but it's always good to plan it this way first. I mean, to help you to calculate your stop loss and all, I mean, your risk size. But just know that you can as well go as a newbie if you don't know how to do this. You come here, you see, I took short now. This is a short position, okay, because it's a sell. So I take my sell here. Look at it here. Remember the rules. What is the stop loss? The stop loss is going to be above this time around the short where the short was called, above it, because that means the candle that determined the short above it to safeguard. Okay. Then the first thing you target is your what? 1 to 2. Look at it. You already hit it here. 1 to 2. And the market keep playing with your emotion. And it came here, bam, you have double of your money. And remember the game. As soon as you have that, what do? Take half of your money already. Don't worry. Take half of your money. Move your stop loss to entry. Okay. And when you do that, what next? You let it fly, you shift, you keep shifting. So the market keep going. Now it's already going like what? How many now? Risk to reward. Is this for real? Okay, yeah, because I've moved the stop loss. So it keeps going down, What do? Remember, okay? You look, you keep moving your stop loss. So just move your stop loss. See, whenever, I don't want to go too technical, but I just wanted to know, just keep moving your stop loss. You can do half of this. Move it into profit. You see now you have made more money, and then it keeps going. Look at it. I love this. I mean, trend wave is a beautiful thing. You can be in the market and you can develop a $50 account to almost $200 in a day using trend wave alone. You see it now. Now the question is, when do you stop? Remember, when do you stop, guys? When do you stop? You see the border. You see this guy here. This boy here. This guy here. He's already saying long, which means by then your profit will have come back to this level, because look at the candle where it's called the long. Take your money and leave the market. That is how to use the trend wave. Please, I want you to do something for me. If you really understand so far, put a 1 in the chat box. Okay? If you understand so far what I'm showing you and excited about it, I want to see a 1 in the chat box. If you're really with me, put a 1 in the chat box. Yeah, the 1 determines the next thing that will be happening right now. I need the 1 in the chat box if you understand what I've explained so far. And this is how I know you're really with me and you're hearing me. Okay? All right. Good. So we'll go to the next one. I want to make an example here. Sorry, let me make an example here. Now, guys, remember I told you that now after this long, okay, after this long here, remember what I told you? It says long. Are you supposed to buy immediately when it says long? No, I said always wait for it to cross, right? Imagine you did not follow my rules. I mean, the exception I gave you. It says buy, and you bought here, it will have hit your stop loss, right? Look at it. It came down, right? So after the buy, after you've bought, you allow it to cross this big one. Okay, when it cross over, then you take your buy here and you make your stop loss somewhere above or below this last candle that crossed over. Make it here. Okay, and you see what happened. You made so much money. Now, another good example is it says short here above this line. Now, imagine if you had sold here, you would have lost your money because it went up afterwards. Yeah, it went down a bit and it went up afterwards. You understand? Why did it happen like this? Because the crossover is here. It didn't cross here before selling. So you have to wait for this big line to be crossed. Okay? When it's crossed, then that's where you can as well take your sell. So these are the reason why we put the warning for I put the warning in front before saying anything, right? Now, look at the recent trade. What I told you is the market, the scanner always give you these parameters. I was always showing you this as a backup. Okay, whenever you see this trade idea, the scanner must have given this idea, the parameters in the past. Look at this now. It says short. You see, the market crossed this line and the market gave the entry. The scanner gave the entry. TP1 to 5 hit already. Look at the market is already here. So guys, this is what we talk about when we say the trend wave. The next one is Smartmonics. This is my favorite. Why? Because I'm an SMC trader, smart money concept trader. That's what I do. Now, I love this one because, yeah, with a set of rules, you are in serious money. Why? Because when it comes to smart money concept, I don't want to go into technicals. For those of you who trade, you know what I'm talking about. A lot of confirmations to be used, but this is when you trade with the banks, with the big boys. Now, the scanner is telling you, hey, you don't need to worry yourself about analyzing. We got you. We're going to show you everything. All the break of structure, all the shifts, all the fair value gap, all those big names. You don't need to worry yourself about it. We got it covered, including volume that you may not get covered. Okay, including oscillatory area which you may not get covered, including divergent, because we don't use all of that in our what's it called. All these ones are for other strategies, but combination of all that gives you everything, including the golden zone as well. These are things that I believe forex trader will understand. Okay, now how does it work? As a newbie, all you do is respect the idea. So long you see this, it means the idea has a 90% tendency of going your way. Just take your trade. Like now, you see this, the market was coming from up, supposed to be a buy, right? So this is a buy limit. So the market comes down, hit your entry, we expect it to go up, right? That's how simple it is. Now, for the experience one, you'll be wondering, why is this so valid? I will tell you. So there are things you look out for. Number one, whenever you see a buy, okay, just know that everything is being calculated. Now, the buy must, where that buy candle is, there's what we call a signature candle here as well. This is it. Look at, you see that all the candles here are the same, but this one is different, the yellow. That was where the call was made. Okay, this was where the call was made that, oh, it's time for you to buy. Now, when you see that, you let it close, and then you put your buy limit here, because you come for a retest and activate your entry. Invalid means SL. Okay, we're on US oil. I'm just using US oil. You can use any forex pair, right? So invalid means SL. So you enter, you put your stop loss at 69.44, entry already is at this, and then the TPs are up there. I'll talk about the TPs much later. Okay, now here, number one, the divergent confirm this this buy, right? Then there's what we call stop block. This stop block is another thing that helps you based on some indicators in the market coming together to show you that this is a very strong area for the market to return to. So anytime you see a stop block, always trade in the opposite direction, because it's telling you that, hey, the market may not get to this part. Then another thing is, if you are buying, it has to be from this zone, this blue zone here. If you are selling, it has to be from this blue zone here, not here, not here. These ones are called inducement for experienced one. Here and here. You let the market come to this part before you buy. You let the market come to this part before you sell, and you make sure that there's a stop block above there before you buy, and let the signature candle before you buy or sell. So you have it. Just fill in your entry as a newbie. The good thing about this one also is the fact that it gives you a very beautiful risk to reward. The first TP is twice of whatever you risk. 2R, 1 to 2. You see, if you hit your TP here, you already have twice of whatever you are risking. So remember, my own advice on that is, as soon as you get to this point, guys, take half of your money, move your entry, move your stop loss here, change it from 69 to 69.36 on your MT5. That means your entry is now equal your SL. You are safe. Your capital is safe, yet you have gone up with some money, right? Now, if it goes the other way, you have 4R, 4 times whatever you risk, and then the last one will give you 6 times whatever you risk. This one is so simple, not much explanation I will give you here, because if I start going into the SMT and all that, it's too technical. Some traders don't even get it right on time, not to talk of the newbies. Just take the entries, that's how it works. Let's check another pair for this. Let's go to Forex. Let's go to Forex. Let's look at AUD USD. If there's a setup, look at AUD USD. AUD USD, AUD USD. Okay. For now, you see there's no setup yet, so no price is showing, no perimeters is coming and all that. Yeah. So that is that. So let's leave that. Let's go to gold. Go to gold, which is under commodities. Let's check gold. I mean, that's the setup already. The one we saw on oil is already a setup, which means also some people are already in on that. Okay. So it's still at the entry area. All right. So gold is prepping up. You know, it's a Monday market. Let's check BTC. Let's check BTC. Yeah, Rita, I see you. You're really paying attention. It's okay. All right. So that is, I think here too is also prepping, of course, for a setup. So if you don't see a setup, you don't force it. You wait for the scanner to tell you there's a setup, there's a signature candle, there's a stop block. Of course, all of this must have been in place before the scanner gives you the entry and every other thing that comes with it. So as you can see on the Smartmonics, you know, it's always like almost try to like a kind of a precise type of strategy. Okay. So when you look at smart money, what does it really mean? Bringing smart money together with harmonics. So we have what we call harmonic patterns, and then smart money. When you bring these two together, your accuracy level is over the roof, actually. Let's go to the next one. Now, not all of these I've actually studied, but the thing is, with my experience, I can actually look at them and tell what it is here. Okay, so this one on the liquidity flow is another scanner, which I will study later. I'll make a video on this one later. But then from the way I see it, of course, the moment it helps you. I think this is better for experienced traders, right? So, I mean, if you're new, stick with the first three that I described for you, and then let this be done by the experienced trader till you learn from the academy better, and then you can start taking this. This one helps you to locate where there are liquidities, and it tells you, lets you know when the liquidity is taken. Okay, it's taken like here now. Imagine as soon as the liquidity was taken and it's about to make its move, you know, look at this time of candle. It will tell you, of course, probably find your demand. Okay, so meaning you buy, you sell. And then when you say find your demand, we all know as an experienced trader, you either be looking for, okay, after the break here, you're looking for a fair value gap in the smaller time frame, or you look for another block, mitigation block, breakout block, and all those jargons here. I don't want to say all that here because I'm more concerned about the newbies, right? They need to make money. Now, let's go to the next one. We have sniper. Of course, this also, the way it looks, kind of self-explanatory. Yeah, you know, self-explanatory. But there's one actually I want to show you. I can't wait to get there. So this sniper, I've not studied it, but this is it anyway. Just know that there's a sniper. I can't wait to get to the next. Is it the next one? Price Hunter? No, not you. But I mean, it's good also. I've not studied this one, but there's one I want to get to. Very, very important. Price Hunter. Just I'll study this and get back to you on that too. Smart Scanner, I'll study also. I mean, yeah. I mean, I think this one is a bit simple. I mean, but then, like I said, I don't want to go too technical because this needs a lot of technicalities. For those of us who are traders already, you know, inverse mitigation block, other block, and all those stuff you see here. I've not even studied this myself. I mean, in terms of how to use it. But hey, guys, I want to introduce you to something superb. We call it the kill shot. Poof. I love this one. Kill shot. Oh my goodness. You know why I love this? If you're the type that you like to trade at a particular time of the day, such that you have a job, you have schedules, and you want to be sure, you don't want to stay in front of the screen, you don't want to be checking every now and then. You just want to have a time to trade of a day, a pair to use it for, and you make your money like almost win rate is like, you know, so high. At least every day you're done. Come for Q shot. Look at the name, Q shot. You know, why do we call it Q shot? Now, when you see this here, there are some things you need to adjust whenever you see this. Quickly, I'm going to take you through it because of the time. Now, you have to stretch to see the candles because all of these have actually occupied the whole screen. So you keep stretching until you see the candles so well. And guys, you'll be excited, of course, especially the new ones also. Even the experienced one, you'll be excited as soon as I'm done with this one. Now, here you have to take some pen. You have to write some things down because you have to remember all of these, they mean something. Now, the first thing you see on the screen here, first of all, the person who invented this skill shot always used it to trade US 30. Irrespective, he said you can use it for other things, other pairs, other instruments, but you have to use a different time frame. Now, if you're using it for US 30, you move from 5 minutes to 1 minute. You see it now, 1 minute. And you only trade it at the US open session. Now, for me, I live in Nigeria, like I told you, that is GMT +1, which is the same as Central Europe Standard Time. And that is, so this time is around 3:30 of my time, yeah, 2:30 and 3 upward. So between 2:30 and 3:30 of my time. So that's US Open. That's like 9:30, 9:30-ish, yeah, in the US. So because the market opens, the volume is high, the volatility is high at that time, and you can be in and out of this and make money so much. Now, if you wonder what are these, guys, don't bother yourself about the clumsy screen. All you need to know is what are these things for. You don't even need to know their names. Now, these things are there to guide you. That when you see this, you do this. When you see that, you do this. I love this one. This is so beautiful. Kill shot. Yeah. So I'm going to be introducing this to you one after the other. The first thing you see here, this board at the top here, especially those of you already into trading, you know what they call time frame. We have 1 minute time frame, which means each candle is 1 minute. We have 5 minutes, we have 15 minutes, and so on. These are time frames. If I click on this one, it means every 1 minute a new candle is formed. If I click on 3 minutes, every 3 minutes a new candle is formed. That's what it means. Simple. But then when we want to trade, it's always advisable we use at least minimum of 2 time frames. One high time frame, the other smaller one. What do you do with high and small? So high means, for example, we pair all these things together. So whenever you're trading on 1 minute, okay, whenever you're trading on 1 minute, it's good to use 15 minutes as your backup for a higher time frame. That 15 minutes help you to determine the direction. So whatever is on the 15 minute, if the 15 minutes says the direction is up, whatever you'll be looking for in 1 minute is how to enter the market and trade. But make sure you enter buys. Look for where to get buys. Don't look anything against the trend. Okay? In some point, people do that, but I'm just saying to make it easy for you. Okay? So the smaller time frame, in a nutshell, is for you to take your action on whether to buy or sell, while the bigger time frame is for you to see the direction that will guide your action in the smaller time frame. So if you look at this, M5 goes to M30, M15 goes with M1, H1, which is 1 hour. If you look at M30, you're going to be looking at H4, yeah, thereabout, yeah, something like that, and so on and so forth. But with this, you don't need all of this. We don't trade all this long time. It's not actually for a swing trade. It's for sharp, something you go in and out. That's it. So for this US 30, if you want to enjoy this, always use for US 30 and trade it around this time. You check your time, go check your time, whatever you're listening or watching from. You check your time over there. What zone are you? Check it against the US time, 9:30 a.m. of US time. Then that's it, 9:30 to 10:30 a.m. of US time, especially New York time, okay? That helps you to get the time to come into the market to have this trade. That is what this board is for. Now, guys, let's look at the board. We talk about trend. What is trend? Trend is talking about the direction of the market, direction. Whether it's up or it's coming down, okay? Now, if it's going up, it is called up, or we call it uptrend. If it's coming down, we call it down or downtrend, right? So this is saying that let's look for the trend of this particular pair, US 30, at M1. And it says up. So it means it's telling you that the market is up at M1, 1 minute time frame here. Also, at M5 is up, at M15 is up. Now, sometimes we traders, we have to go to all this time frame by ourselves. No, the market, the scanner is telling you already, it's up here, it's up here, it's up here at what? At M30, only at H4 is down, but daily is also up. Okay? Now, that is that. The next thing you see here is POC. What does POC mean? Point of control. You need to write that down if you may. Point of control. Where is this point of control? This line you see here. This yellow line you see here. That is what we call point of control. Now, the POC, point of control, is what you have here. Is what you have here. I need to point out this thing. So, yeah. So this one, this line is point of control. Now, what does this mean? Whenever the market is above this line, like this one, you are looking to buy. That is uptrend. Whenever the market is below this line, you are looking to sell. That is downtrend. Okay? So always be guided. Whenever you see the market above this line, look for buys. Whenever you see the market below this line, look for sell. Now, this point of control is actually telling you where the most volume of the market is in the last 6 hours. So the market usually respects the volume area because it uses it to bounce off. So even if the market comes down there, it goes up again most times. Yeah. So always look for buy here, and then below it, look for sell. That's what we call the point of control. Okay. Now, here on this board, it's telling you that the POC on M15, the price is above. You see it now. M30 is above. H1 is above. So which means the market is up. So two confirmation telling you that the market is up now. The trend is saying up, up, up most times, only for this one. And then even the POC, every market is above. The price is above the POC. You'll be looking for buy on this point. That is done already. Okay. We all know what this board means. Okay. When you see it, just know that, first thing, like I told you, you be on US 30, you go to 1 minute. Then you know that 1 minute works with what? With 15 minutes. So if the 15 minutes says direction is up, you'll be looking for down, you'll be looking for buy on the 1 minute. Luckily for you, even the 1 minute is confirming it said up. So that makes it even much better. Okay. So you make better decision. The next thing you want to look for is the support and resistance line. Now, for those of you who are already taking the basics, you have the support and resistance line. Okay. Now, this one, the green one is the resistance. The red one is the support. What is support? Support means a point where the market touches and then reverses up. Okay, the market comes to touch it and then reverses up. And then the resistance means a point where the market comes to touch and then reverses downwards. Simple as that. Don't think much about that. So you know. Okay. The next thing you want to learn is this stars. This is your saving grace in this trade. I mean, this, if you want to enjoy the signal, Don't worry, I know how to summarize for the beginners what you look out for. That's all. I just want to introduce everything so you don't look at it like, yeah. You know, so you have the stars here. Now, forget the yellow stars. I'll just want to make it short. Forget the yellow stars, forget the blue stars. Okay, and I'll tell you why you should forget them. You see, whenever you see the yellow stars, the movement after that is short. You see, very short. Yellow, short. Blue, short moves, which means if you see a blue here now, the move is short before you see another star and all that. But you know the stars you want to focus on? The red stars and the green stars. That is where the money is. I call them the money stars. The red stars are the green stars. Now, so whenever you see a red star, what usually follow is a triangle going down, telling you, guy, you have to sell. That's how you use the kill shots, okay? This red star means, oh, the market is going to go up for a while, and it's going to be a little while. Like, if you look at this now, okay, after the red star, let's say I see this red star, okay? Remember, this is above the POC, right? But the red star told me, oh, you can sell from here. But I won't do that yet. I just want this to cross the POC, right? Then as it's crossing the POC, sometimes I'll tell you the rules, the one that is most important of all these signals, okay? Now, when it crosses, I take my sell. But when I take my sell now, what happened? You see the market goes down. Here, you only target 1 to 2. 1 to 2. If you want to do anything more than that, do what I did before, what I showed you. So let's say you took the trade here, okay? Your stop loss is above the triangle here, okay? And then you target 1 to 2 and you're done. You made your money. Now, if at all you want to stay in the trade, make sure your stop loss is already at this 1 to 2, and then you just wait till the rest keep going, right? But that's not the point yet now. You don't want to trade down. But I'm just telling you that when you see the red star say sell, it's going to be long. You go in. Okay? Look at this triangle. Turning down also is a signal that you should sell. Okay? When you see the green star you want to buy and you see it's long, these are big money, you see? That's why I say ignore all the stars apart from the red and the green. When you see the green star, remember you want to buy, and it's long. But now the conditions for buying or selling, even if when this star tells you to buy, you have to wait for something. I'm back. Sorry, guys. Power outage. Yeah, it happens. All right. As I was saying, so when you see the stars, it's a good time for you to buy. Look at it. Imagine you bought here. You would have made so much money. Okay? Like now, the market is saying sell. You see? Now you will make money. But then before you do that, there's something I need to introduce to you again. Okay? We call them the EMAs. These blue and red lines. Okay? The blue is the 50, the red is the 20. You don't let me tell you all about that. Just look at this blue and red. Now, whenever the market crosses this blue and red, is another sign for you. Okay, when it crosses it on the way up, is to buy. When it crosses on the way down, is to sell. Now, if you look at this sell now, this time around, it's crossed when the red star was announced. Okay, the market crossed the red and the blue, and it came all the way down. It's safe to sell from there. And then when you say buy, you make sure that it crossed also is a good time. But the one I want to introduce to you, which is the best of them all, which is the strongest, is the 238. As a matter of fact, this 238 alone and these stars can be only signal. Yes, look at this 238. This orange line, this one. You see it going this way? You see it? Trace it downwards. Trace it backwards, sorry. You see it now, 238. Always focus on this 238. It's called 238. That's the name. 238. That's the figure. Now, anything you are doing, even if all of them are aligned, you have to be a respecter of this 238. For example, if it's a buy, you have to wait for it to cross 238. If it's a sell, you have to wait for it to cross 238 downwards. If it's a buy, it has to cross it upward. If it's a sell, it has to cross it downwards. Okay? Now, another way of using it is, for example, look at it. When this sell was called, this one was the best of them all. I mean, look at the red star says yes. The signal scanner says yes in the triangle. The POC point of control, it crossed it also. It crossed the red and blue, and it crossed the 238. You see, this one you can sell with your eyes closed. Some will even, I don't encourage that. Some will even flip over here. They flip over the account here. So you sell here. Now, when you sell, the only thing you want to consider in all of these things I've mentioned is this 238. So let's say you sell. Now I'm going to recap that again. You know, I said I showed you how to sell, right? So let's say the market says sell. Okay, the market says sell. You wait for this candle to cross this 238. Now it has crossed. Look at this candle crossed here and it closed there, right? You take your sell here and your stop loss must be above, only above the 238. Don't worry about others. Even if others are far away, no, just the 238. Make sure, because 238 is the zone where the market hardly come back to and then breaks. Not that it doesn't break, but it hardly. So it protects your stop loss. Protect your capital here. Just hide behind it. Hide behind it 238 and then extend for your 1 to 2. And this gave even more than that. Give it like 5 times whatever you make. Okay? Now, when do you know, how do you know when to close your trades? The moment you start seeing the blue star. The blue star or the green star, okay? Because you know the blue star, the yellow star, most times they're telling you it's going up, okay? When you see the blue star, or better still, just be moving your stop loss. So whatever it is, whatever happens, you're already in profit and you're out. That's just it. Or you just target your 2 and you're out, okay? So what did I say now? Always respect the 238 line, okay? Make sure your stop loss is above it and that's it. If it's a buy, the same thing. Look at this buy now. Okay, look at this buy. This buy called a buy. The star here, the green star says you should buy here. Of course, some of you say, man, this is a long move. Okay, you make sure you wait. It's crossed 238. Don't care about all this ones. Just let it cross the 238. As soon as it crosses the 238, you can take your buy. Look at the 238 here now. It's crossed. You see, even at this point, even the POC doesn't matter. So long it crosses the 238, just take your buy. So look at the cross of 238. So how do you make money? Look at it again. You see here, you click because it has crossed now after the close. Now your stop loss, remember, must always be below the 238. Okay, it must always be below the 238 no matter what. And according to our educator, it always tells us that most times the stop loss will be 25. So when you see 2,432, that's actually 24. Okay, 24 pips. So this is 25, less than 25. So you see, it's below the 238 and extend for your 1 to 2 risk to reward. And you see, you are in money. You make money. And this is very fast. You see? Now, if you notice, it has called sell with this red star. Remember, I told you the green and the red star is very important. But do you sell now? No, wait until this thing keeps going and cross. See, this 238 will keep on going up like this. The moment it crosses this 238, I tell you, take this trade. I tell you, take this trade. You make money. And that's how kill shot works. That's how the kill shot works. Guys, we have the last one, I think, indices strategy. That is a bit technical. I'm going to be studying it later on and I'll make videos on this one. But at this point, I'd like to end this call. As a matter of fact, I've been getting a lot of calls right now. Yeah, people want to make money, right? I'm getting a lot of calls, so I need to attend to all these people. And I believe with this, we are fine, okay? So this is the mentor Ismail. Any question you have, you're going to send me a message. You can comment on the YouTube because I'm going to be putting this on, of course, this is a YouTube channel. So you just put the comments there, ask your questions, whatever question you want to ask me, but be respectful, okay? You ask your questions politely. I'm going to be responding to you. And if you want to know more, go to my bio. The link is there. You jump on, and then jump on the call and I will explain better on how to use all the signal and make money and cash out from the Forex. It's the future, guys. The future is now. Don't joke with it, okay? It's the AI period. The mentor Ismail, signing out. Thank you very much.